Hello, this is Jordan, and this is your Precious Metals video market update. This is being recorded on Tuesday, January 20th, 2015. And let's start with a monthly chart of gold, which earlier today closed at $12.94, but has actually gone above $1,300 in early Asian trading. As far as the question, when do we know that we're back in a bull market? One could say that we need gold to close above 1400. Also 1250 was a key level that we talked about in recent videos. There's just a series of steps that the market has to take, and eventually when the market performs really well and clears certain levels, then you know the bottom is in. I happen to think that the bottom is in, but to play devil's advocate, the bears really need to hold 1330 on a monthly basis. So that means if gold closes above 1330 for the month, it can be this month, next month, or the month after. In my opinion, judging from this chart and many other factors, that means we're back in a bull market. I mean, that would be the highest monthly close. That would be a new 52-week high. So with gold trading around 1290, 1300 right now, 1330, that's the next major resistance, and so that's a level to keep an eye on. And this is a chart where we're looking at some of the strongest cyclical moves in gold, which are 1976 to 1980, 1970 to 74, you have 2008 to 2011, then also 2005 to 2008. And so we took that weekly data and put it all on the same scale, and that scale is this current fledgling bull market, if indeed a bull market began back at the end of November. And again, we're using weekly data. If we use the daily bottom for gold was early in November, while the weekly bottom came later in the month. So I just wanted to clear that up. And I do have another chart, but it's not shown here, where I average these four into one. And gold right now is slightly above that average. So it's tracking the average. And as you can see in this chart, the real key for gold in the coming months will be to trade above 1300 and really hold well above 1300. So obviously we have to be patient, but I mean, judging from the last chart, we talked about 1330 on a monthly basis. So if gold is in a bull market, then it's more likely than not that in the next couple months it should trade above 1330, trade in the mid 1300s, or perhaps even get close to 1400. I don't think gold is going to be able to trade up to 1500 right away, as this analog may suggest with some of the history. But it's just something to keep in mind. And look, when you're in a new bull market, usually it takes a long time for people to come to that realization, and the biggest gains always come right off the bottom. So if we see gold go above 1300, go above 1330, that's going to shock some people. But judging from this history and judging from the last chart, that's if we do think we're in a bull market, that's exactly what should happen. Now, looking at the same question and applying it to the minors, we have GDXJ, the juniors, really the larger juniors on top, and then we have GDX, the seniors. One of my favorite moving averages has always been the 400-day moving average, just because when you look at 10 or 15-year charts, the 400-day moving average seems to mark so many key long-term points, far more so than the 200-day moving average. And we can see here, using that average in both these charts, that it's been a very important indicator. Just look at GDXJ and how at the end of 2011 and early 2012, it traded below the 400-day moving average, and then it's never been able to get above that. And in the summer of 2014, where GDXJ actually was trading at close to, I want to say a 9, maybe even close to a 10-month high there, that at that point in time, it was the 400-day moving average that provided the resistance, and then we saw the severe decline, which is looking like that final decline that people were talking about for so much of last year. But anyway, if GDXJ, and the same goes for GDX, let's look at the lower half of that chart. I mean, that has provided resistance three times in the since the end of 2011. You can see in early 2012, and then after that big summer rally in 2012, and then the summer rally in 2014, and now the market is getting very close to that point. So to sum it up very quickly, it's the 400-day moving average that's the key for the miners. If they can trade above that, then that's a sign that we're in a new bull market. I do think we're in a new bull market, but who knows? Keep the 400-day moving average in mind. That's all for today. You can follow my work at thedailygold.com. You can sign up for my free newsletter by putting your email into the box at the top right of the website. We also have a premium service. Thanks so much for watching and listening, and I wish you all the best this year in 2015.